On growth, domestic economic activity continues to recover, evidenced by the steady improvement in the bank's high-frequency economic indicators. The CIEA is recovering from negative territory and is likely to turn positive by year-end, showing a more solid rebound in economic activities. Both business and consumer sentiments remain largely stable. Private sector credit growth, however, remains dampened due to risk aversion by banks amid tightened policy conditions and rising credit risk. With continued improvement in the macroeconomic conditions supported by declining inflation, credit conditions are expected to improve with a turnaround in credit extension to support growth. The external payment position is expected to improve, underpinned by continuous implementation of the IMF-supported program and the Gold for Reserves program, among others. The early completion and settlement of favorable agreements with bilateral creditors and commercial bondholders will help boost confidence and trigger resource flows to the economy. The strong build-up in reserves have provided cushion against external vulnerabilities, including the delay in the cocoa syndicated loan. Reserve build-up will even be stronger by the end of the year on receipt of the cocoa loan and disbursement of the IMF's second tranche. In the outlook, sustained fiscal consolidation will be needed to place the economy firmly on the course of disinflation. The implementation of the budget thus far has been strong, reflecting the attainment of fiscal targets under the program for the first review. The 2024 budget is also designed to reinforce the ongoing fiscal consolidation. Headline inflation has continued to decelerate in the past few months, consistent with forecasts. The latest bank forecast indicates that the disinflation process is expected to continue, supported by the current tight monetary policy stance, relatively stable exchange rates, and base drift effects. All the core measures of inflation and inflation expectations are pointing downwards, and the bank will remain vigilant on risks to the disinflation process. The committee noted that although inflation is decelerating, it remains high relative to target. Therefore, there is a need to keep the policy rate tighter for longer until inflation is firmly anchored on the downward trajectory towards the medium-term target. Given these considerations, the committee decided to maintain the monetary policy rate at 30%.